It's a pleasure to welcome you to this very important webinar hosted by the F.W. de Klerk Foundation in collaboration with the National Treasury. Now, the National Treasury is hosting what they call Money Smart Week 2024. So, friends, today we gather not just to talk about financial literacy, which is very important, but also to delve into the very essence of what it means to be empowered as South Africans, to be empowered to make informed decisions, to be empowered to safeguard all of our financial futures, and of course, to be empowered to exercise our constitutional rights with confidence. So consider this, for instance. Financial literacy is not just a financial skill, it's a cornerstone of our democracy. It's essential for realizing the rights enshrined in the Constitution, which we'll be touching on today. From the right to freedom of trade and occupation, Section 22 of the Constitution, to the right to property in Section 25 of the Constitution and housing in Section 26 of the Constitution, these rights are not just abstract ideals. They are the foundation upon which we can build a fairer, a more just, and a more inclusive society. So today's discussion will explore how financial literacy can unlock these rights, particularly for people like us, for the youth of South Africa, the future of South Africa. So throughout this webinar, we'll examine, Ezra and I, we'll examine the understanding of finances, of how finances empowers us to make better decisions. We'll touch on how to start and grow businesses, to secure homes, and to protect our hard-earned assets. So together we'll explore these themes through the lens of constitutionalism, through the lens of equality and social justice, ensuring, as I say, that the rights in the Bill of Rights that are guaranteed to all South Africans are truly accessible. So I invite you to engage deeply in this webinar, to ask as many questions as you have, and ultimately the goal is for you to leave this webinar with the tools and knowledge to secure not just your own future, but indeed the future of our nation. My name is Ismail Joosub. I'm the Manager of Constitutional Advancement at the F.W. de Klerk Foundation, and I'm joined today with my very learned colleague, Ezra Mendel, who's the intern at the Constitutional Advancement Program at the F.W. de Klerk Foundation. So I now hand over to Ezra to introduce himself and to kick off the webinar.
Thank you, Ismail. Hey, everyone. Thank you. So as Ismail said, thank you so much for joining us today. My name's Ezra Mendel, and I'm an intern at the F.W. de Klerk Foundation. I believe I might have had the privilege of meeting some of you at the CAS-SIA event, and to those I might not know, I look forward to engaging with you through this webinar and even in person. So to kick off this webinar, let's look at the introduction to the consumer rights and Section 22. Now, this year's theme is Protect Your Money, Secure Your Future, which encapsulates the essence of financial security in a world that is increasingly digital. As financial transactions shift online, so too do we face certain risks. We have cyber crimes on the rise, scams, and digital fraud, which some of us might have fallen victim to. And these are becoming slowly everyday threats. Therefore, it's imperative that we explore how Section 22 of South Africa's Constitution supports laws like the Consumer Protection Act and the Electronic Communications and Transactions Act, which safeguards our economic freedoms in this rapidly evolving landscape. Now, let's begin by considering the fundamental rights provided by Section 22 of our Constitution, which guarantee every citizen the right to choose their trade, their occupation, and or profession freely. And even with our run-up to the elections, the F.W. de Klerk Foundation's analysis of manifestos, this was a very key area which we looked at the various political parties' manifestos to see if they upheld this. Now, Section 22, of the South African Constitution is a crucial safeguard for economic freedom, particularly for us young people navigating the job market. Some of us are in university, some of us are going into professional careers, and therefore this becomes ever more important to us. And it guarantees every citizen, as I said, the right to choose their occupation, their trade, freely, enabling a pursuit of diverse career paths and fostering entrepreneurship. This is important, especially in a country like South Africa, which we know, unfortunately, grapples with high levels of unemployment, especially youth unemployment. And what this serves to do is to empower young people. This section of our Constitution actually serves to empower us for our futures, our respective futures in our diverse careers. Now, this right is not without its threats, right? So yes, we highlight how it is important for us, but it does have certain threats, specifically regulatory overreach, where excessive government intervention and burdensome red tape can stifle innovation and limit access to certain professions, which poses a significant challenge, especially for a country like South Africa, where we're really focusing on development, right? Now, additionally, increased digitalization of the economy brings new risks. As cybersecurity threats, many companies are starting to having to put a lot of funds to back their online security protection, to identifying certain loopholes. So this becomes a very important part. We're even seeing careers in cybersecurity are becoming more prominent now, more than ever before. Sorry. Now, there are economic barriers, such as the lack of access to quality education and training, which also threatens the realization of this right, as they prevent young people from fully exercising their freedom to choose and succeed in their chosen professions. Now, protecting and strengthening Section 22 is therefore essential to ensuring that young South Africans have the freedom and support they need to thrive in a rapidly changing economy. Now, economic freedom today is not just about choosing a profession, right? We see the trends before, years before, it was about a profession and that's your economic freedom. But today, it's about being able to engage in commerce safely and confidently. Now, with the rise of technology, we understand that, yes, it does benefit us, but it also comes at a cost. And now we find that the digital marketplace offers unprecedented opportunities, but it also exposes us to new forms of exploitation, to deception, and can undermine our economic security. It's here, this is the place that the protections offered by the Consumer Protections Act and the ECTA become essential for us, right? Now, let's look at the intersection of economic freedom and digital age challenges, right? Now, economic freedom is closely tied to our ability, your and my ability, to make informed decisions and choices to engage in fair and transparent transactions. However, the digital age presents unique challenges that threaten this freedom. The rise of online transactions has been accompanied by a rise in cybercrimes, such as phishing, identity theft, and even financial fraud. Now, I was even looking at a very interesting comparison where they had two links. You know, a link you click to a website, and one of the links was to the website, and one of them was a fraudulent link. But the funny part is both links looked exactly the same. And now this shows us the level of sophistication these crimes have reached, which even become more of a problem for us, right? So these strip away economic gains we work so hard to achieve. Phishing, for example, is a form of cybercrime where attackers masquerade as legitimate institutions such as banks or government agencies to trick individuals into providing sensitive information like passwords, credit card numbers, or social security numbers. Even banks have picked this up, and banks are trying to mitigate this issue because it's becoming very prevalent, and it's really taking strains on our economy. Now, these fraudulent communications often come in the form of emails, texts, SMSs, websites, and they appear genuine, right? But once your information is compromised, it can drain your bank account. You'll find that it cleans out everything in your bank account. People take out loans in your name or make unauthorized purchases, sometimes with devastating consequences to you, not even to the suspects, but to you as the victim, right? So similarly, identity theft occurs when someone unlawfully obtains and uses your personal information, typically for financial gain or other opportunities. This can happen when your data is stolen from phishing or hacking, or even your physical documents like your ID or credit cards are stolen. The impacts can be severe, ranging from financial loss, again, to long-term damage to your credit rating. And that's a very hefty one, especially for us young people who are, entering into job markets and everything. You don't want to have such a strain on your credit rating. And now, if there's a strain on your credit rating, it can cause so many issues. Now, these threats underscore the need for robust consumer protection measures in a digital realm. As I said, now we're finding there's a need to evolve with the growth of these forms of crimes. There's a need for us to evolve, for companies, for institutions, for us as individuals to evolve and adapt to ways to prevent, these crimes from prevailing. Now, we want to look at the key legislations protecting customers, namely the CPA and the ECTA. Now, to combat these threats, South Africa has enacted several key legislations, most notably, as you can see, the CPA and the ECTA, where we see the CPA being designed to ensure that the marketplace operates in a fair and sustainable manner, right? So key sections of the Consumer Protection Act that relate to our discussion here today are, for example, Section 55, which speaks on the right to safe and quality goods. And here we see that it guarantees us consumers the rights to safe and good quality goods. This means that the product we purchase, whether online or in store, must meet basic safety and quality standards. For instance, if you buy an electronic device at a store and it arrives with a defect, Section 55 is what you would use, which empowers you to demand a replacement or a refund. And that's why in stores you find such laws are adhered to by especially your digital device stores, right? And for other stores generally. Now, secondly, we look at Section 56. Now, Section 56 introduces an implied warranty of quality, right? This allows consumers to return faulty goods within a 6 months period of purchase, a critical protection in an era where online shopping has become the norm. So I myself have made use of this, where you invoke your guarantee. So these are laws in our everyday practices, right? In our everyday consumer habits that are there to protect you and me. Now, lastly, Section 61 highlights the liability for damage caused by goods. For example, it holds producers and distributors and suppliers strictly liable for any harm or any defect for unsafe goods. For example, we know some motor cars, car manufacturers, once they notice a defect, they do a huge recall. There was a time, I don't know if you would remember, the Ford Cougars would like just randomly catch fire, and the motor companies would be liable for this because Section 61 would have kept them liable for this. So lastly, complementing the CPA, we have the ECTA, which specifically addresses the challenges of the digital economy. Now, under Section 11 of the ECTA, we see that it provides legal recognition for electronic agreements and transactions. This means that contracts and agreements made online are legally binding, as if they were made in person, right? Giving consumers the confidence when engaging in digital commerce, right? Then we have Section 43, which speaks on the mandatory information disclosure by online suppliers. This requires online suppliers to provide detailed information about their goods and services, ensuring transparency and reducing the risk for fraud. For instance, if an online retailer, right, fails to clearly list the terms of a safe and of a sale, right, and the consumer is protected under the ECTA Act, and then the transaction can be void. So again, let's look at Section 44, where we see the cooling off period for online purchases. We see that it offers a cooling off period, allowing consumers 7 days to cancel a transaction without a penalty. This protection is particularly important in combating impulsive decisions or when consumers are misled by aggressive online marketing tactics, which we see prevalent always. Now, these are just a few examples of laws that you might not even have known of that are there, that you see in your everyday transactions or your consumer practices that are there to protect you because of the growing nature of threats that are accompanying, digitalization and our advancement in our economy. So let's look at the digital threat landscape. Now, one thing we have to recognize is the rising threat of cybercrimes on the digital threat landscape. Now, despite these protections, and this must be emphasized, despite these protections, that these protections are there, but even though they are present, cybercrimes are on the rise, and the sophistication continues to evolve, right? Now, as we discussed earlier, phishing attacks and identity theft are two of the most prevalent forms of cybercrime that target consumers. But the digital landscape presents many other risks as well. Let's look, for example, at malware. The malicious software, it can be installed on your computer, on your smartphone, without your knowledge, right? Often through a seemingly innocent email attachment or a download. Once installed, it can monitor your activities, steal your information, or even hold your data ransom until you pay a fee. And this was actually done to the Department of Justice and other government departments, where they hold their data ransom until they pay a very high fee for their data to be released. And a question I always ask is, does their data get released, or does their data just is their data just kept, right? Now, the second one we can look at as an example is ransomware. So we looked at malware, now ransomware. Ransomware is a particularly harmful type of malware. Ransomware, it locks you out of your own system or encrypts your files, demanding payments to restore access. Now, if you don't have secure backups, the consequences can be catastrophic, right? And we can go all day on the consequences for that. Lastly, we see fake websites and online scams, and these are fraudulent sites designed to mimic legitimate businesses, and they often employ tricking tactics to ensure payment details or purchasing goods that never arrive. Now, these cybercrimes not only result in financial losses for an individual, but it erodes trust in the digital systems that are becoming integral for our economy, especially for our developing economy. Now, for vulnerable populations, such as the elderly, business owners, small business owners, or the less vulnerable, or the less familiar with technology, the impacts can even be more severe because of a lack of awareness, right? And these can lead to a loss in savings. People work hard their entire life, they lose savings, their reputation gets tainted, and there's the economic opportunities just fall flat. Now, looking at the strategies for financial protection, right? We see that given the complexity and pervasiveness of these threats, financial literacy has never been more critical, right? Educating consumers on how to budget, invest, and manage debt is essential. And what's even more essential, especially for us as youth that are going to be the future of our economy, this even becomes more imperative. And hence why we as the foundation decided that we want to use this Money Smart Week to empower the youth on this financial literacy, right? Now, financial literacy must encompass the skills and knowledge needed to navigate the digital economy safely. Consumers must be aware of the risks associated with online transactions and know how to protect themselves. This includes recognizing phishing attempts, which is becoming even harder, as I mentioned, with the links, that it's so sophisticated that you barely can even see the difference. Using strong and unique passwords, which many apps are starting to employ, and enabling two-factor authentication and monitoring financial accounts regularly for any signs of unauthorized activity. Moreover, financial literacy programs should educate consumers about their rights under the CPA and ECTA, empowering them to demand fair treatment and seek redress when wrong. It is through this combination of knowledge and vigilance that we can protect our financial futures, your and my financial futures, and uphold economic freedoms guaranteed by our Constitution. So yeah, with that, I'll just hand over back to Ismail.
Thank you very much, Ezra. That was very articulate of you, and I hope that our listeners now have a better idea of all of the scams like phishing and identity theft that you mentioned. Now, you see the slide in front of me, everybody, speaks on youth empowerment and securing specifically the right to education. And I think this is very important for all of us listening because we're predominantly young people, and young people need to have a good education which serves as a good foundation to succeed in life. Now, Ezra, I know you spoke about financial literacy, but I want to delve a bit deeper into financial literacy and its impact specifically on education. So as I mentioned in the introduction, financial literacy is not just a skill that each of us should have, but it's something that is vital for each of our empowerment. You know, Ezra and everybody listening, I often ask myself why financial literacy isn't something that's included in our curriculum, especially in your primary or your foundational school phase, because these are the tools that you need to succeed in life. And, you know, you get to a stage in your life where you got to do your taxes, and we find that because we haven't learned this in school, because it hasn't been a part of our syllabus, that we have to navigate this terrain on our own. But no need to worry, the FW de Klerk Foundation is here to assist you in that regard. But I want to touch on the Bill of Rights. Now, in the screen in front of you, you'll see two specific rights that stand out: the right to education and the right to choose one's trade or profession, which Ezra so eloquently touched on. Section 29 of the Constitution articulates the right to an education, specifically a basic education. It guarantees every citizen the right to a basic education, and this right is preeminent for any personal development and for economic participation as well. And that's where financial literacy comes in, because financial literacy is integral here, as it enables students to pursue this journey of financial complexities of what they'll be facing later on in life, but also the finances that you might find in your educational journey, like managing student loans, like evaluating the costs that are associated with going into different educational pathways. But I have to say that we do face a problem here. Despite the constitutional guarantee to the right to a basic education enshrined in Section 29 of the Constitution, I have to ask you, do you think that the state is doing enough? Well, that may be so, but the current financial literacy status or rate in South Africa reveals significant gaps. Still, to this day, in 2024, you find that many students still lack the necessary skills to manage their finances effectively, which then obviously then hampers their ability to fully benefit from their educational rights. Because if you're not able to manage your finances, you might not be able to pursue a further education properly with knowing how to finance your education. And obviously that impacts on your right to an education. So there is an urgent need for more comprehensive financial education to better prepare students for the financial realities of further education and for the job market as a whole. Now, Ezra, I know you touched on Section 22. I'd like to also just dive into it a bit. Section 22 guarantees the right to choose one's trade, occupation, or profession. And financial literacy, I would say, is also very important here as well, because financial literacy supports this right. It upholds this right by equipping students or equipping young people or even equipping older people with the skills that they need to make those informed career choices and also to make investments in education and entrepreneurship. Because when you pursue a path in education, you're investing. It's a financial investment, yes, but it's an investment in yourself, in your skills, which you hope will yield a return for a better day and set you on the financial path that you want to be on. And you need to have financial literacy to embark on that path. But still, we find that many young South Africans face challenges in accessing financial resources and guidance that could help them to achieve their professional aspirations. You know, I have to say that a story I could tell is that whenever Ezra and I conduct engagements with young people, especially young people who are still in schools, one of the things that we get asked about a lot is, how do we go to university if we don't have any money? And if we don't have that, how at least can we be informed about what the different financial options are for us? And I think that's what financial literacy is. And so you see just from that limited financial literacy restricts your career opportunities completely and your economic mobility, climbing from where you are to where you want to be. And all of this impacts on the right to education. The next slide I have speaks on economic dignity. Now, dignity is something that you'll find in the Constitution. You'll find it in Section 10 of the Constitution specifically. That section ensures that everybody, every South African, has inherent dignity, meaning you're born with a certain level of dignity that must be upheld, and the right to have that dignity respected and protected. And so financial literacy is important here as well, because financial literacy in this regard means knowing how finances work, knowing how to manage your finances. And that's the theme of Smart Money Week or Money Smart Week. The theme being protect your money, secure your future. Financial literacy in this regard contributes to the right to human dignity by promoting economic self-sufficiency. When individuals, I would say, are financially empowered, then they experience reduced financial stress, for instance, and they are less vulnerable to exploitation, and that safeguards their right to dignity. Also, with financial literacy, it means that you're better able to prevent yourself from falling victim to the scams like phishing and identity fraud that Ezra spoke about earlier. So, effective financial management allows individuals to navigate their resources better, to avoid those exploitative practices, and to achieve a level of economic stability that supports their dignity. But you'd also see on this slide that I have the right to access to adequate housing. And adequate housing is something that's also found in the Constitution. Specifically, it's found in Section 26 of the Constitution, where therein you'll find that this right guarantees access to adequate housing. The state must provide adequate housing for every South African, regardless of your financial level. Financial literacy plays a critical role here because you'll find in some of our next slides that the state hasn't been able to do that, or we still have some hurdles in seeing that right fully realized. And many people then choose to move on into private home ownership. But private home ownership affects your wallet because you've got to pay for it yourself. And so financial literacy makes you better informed about things like rentals, about financial planning, about budgeting, all related to the housing market. This is because many individuals really struggle to manage the financial responsibility of owning a house because of that inadequate education, financial education that I managed that's missing in the school curriculum. And the gap affects their ability then to secure not just housing, but also to see the rest of their constitutional rights fully realized. So I mentioned the state of financial literacy in South Africa, and I want to touch on something here. Ezra and I have been doing a lot of research. You'll find on your screen in front of you research from a 2018 study by two acclaimed authors. And that recent research brought to the fore a troubling trend in South Africa. What this research told us, and Ezra and I were quite appalled at this, is that financial literacy is, in fact, on the decline in South Africa. And this 2018 study indicated basically a deterioration in financial literacy that affects individuals regardless of their educational attainment. And I think that's something that's very important. In simple terms, let me say that financial literacy is lacking not just among young people, but you find people even with PhD degrees that still don't understand how to manage their finances and don't have a strong tool to help them build their financial future. This is really a deep-rooted issue that I think must be addressed, and I'm glad that Money Smart Week gives us the platform to address this issue. You'll also find on your screen in front of you an HSRC research report. The Human Sciences Research Council corroborated the findings by the 2018 study, which also showed a marked drop in financial literacy scores. And financial literacy scores are particularly bad, you would not believe it, particularly bad amongst young people and women. Many South Africans, many South African youth, many South African women struggle with fundamental financial concepts like how do you calculate interest? How aware are you of the current inflation rate in South Africa? So this decline in financial literacy contributed then, we saw, to a higher level of personal debt, that when people didn't understand how to manage their finances, they got themselves into higher levels of debt. They were more vulnerable to financial scams. They also experienced widespread financial distress, and this disproportionately affected the most vulnerable segments of society. And it just exacerbated the existing economic inequalities in South Africa. I'm sure that many of you listening to this would know that South Africa already ranks as one of the most, if not the single most, unequal society in the world. And this gap, not having an adequate financial literacy program from a young age, exacerbates that inequality level. I spoke earlier about young people asking me the question of how to fund studies after matric. And I know that some of you listening to this might still be in school and might be eyeing a professional degree or professional career path, but might not be so certain on how to attain that. But the topic of the day is financial literacy and why it's so crucial to managing the financial complexities that come with having that higher education. I'd like to touch on some research that Ezra and I have done here as well. You'll see on the screen in front of you that between the years 2019 and, if I'm not mistaken, 2022, the National Student Financial Aid Scheme, what we call NSFAS, disbursed 123 billion rands, that's a lot of money, to 2.9 million South Africans from low-income households. This substantial financial support underscores NSFAS's role in facilitating access to higher education for economically disadvantaged students. And that's the point of NSFAS. NSFAS is there as a platform to put people, especially young South Africans who are unable to fund their studies, on the right track to be able to go on and achieve a higher education degree without hurting their pockets. And we've also seen that in complementing NSFAS, we now have the introduction of a new 3.8 billion rand fund, a new fund, which aims to support what's known as missing middle students. I'm not sure if many of you have heard the term missing middle. It's been in the news a lot these days. The missing middle essentially refers to students from households who earn between 350,000 rands and 600,000 rands annually. So if you fall within that financial category between 350,000 to 600,000 annually, you form part of what's called the missing middle. And now there's a new fund consisting of 3.8 billion rand to support missing middle students. The fund does represent a significant investment, but I have to be frank and say that concerns still persist about its adequacy and about its fairness. I'm sure many of us have heard a lot of developments around that as well. Less than half of students expected to benefit from this missing middle fund don't receive funds, and this raises issues about the allocation and its effectiveness as a whole. And I've spoken about NSFAS, but NSFAS has a lot of concerns and challenges as well. Administrative challenges have plagued NSFAS, especially recently, including late payments disbursed by NSFAS. There have been management inefficiencies by NSFAS. These issues have led to student unrests. We've seen a lot of student protests around universities all across South Africa. It reflects the ongoing difficulties in effectively managing student funding by the government. We've also seen the recent dissolution of NSFAS's board, which also indicates a high level of mismanagement within the organization that is NSFAS. And there's also been reports from the South African Union of Students, which highlighted delays in allowances, which have caused a great deal of financial strain on students, which, as I say, exacerbates the many challenges that students already have. So when we look at mismanagement, we have to ask ourselves what the consequences of financial mismanagement are. If you have an inadequate level of financial literacy, in other words, financial mismanagement, especially when it comes to student loans, this essentially erodes your quality of life. It impacts your economic participation, like we said in Section 22 of the Constitution, and it significantly falls to the detriment of your career prospects. High levels of debt are encountered, poor financial decisions occur, which diminishes young people's ability to meet their basic needs, like access to food, like access to water, like access to social security, all of which are rights enshrined in Section 27 of the Constitution. And this, I'm sure you'll all agree with me, this affects your overall standard of living, your quality of life, and again, perpetuates to economic instability in South Africa as a whole. So that's why it's very important, I would say of paramount importance, to have early financial education, which is certainly a key to success. If we are, as a nation, to integrate financial literacy into early education, we will be able to foster generational wealth. We'll be able to help young people understand budgeting. We'll be able to provide more long-term financial security for all people in South Africa. And I think here the three things I want to focus on are generational wealth, savings and investments, and budget and debt management. Starting with generational wealth, early financial education helps individuals create wealth that supports long-term economic stability, and you pass this on to generations who come after you. I think here one must question what effect the lack of financial literacy on our parents had in affecting our standard of living today. Then savings and investments, when understanding savings and when understanding investments from a young age, you're able to get financial independence more easily, to be more easily financially independent. This aligns with your economic freedoms in the Constitution. And then we look at budgeting and debt management. Teaching the skills of budgeting to young people equips young people to manage their finances effectively, and all falls in line with what we've said about ensuring a more adequate standard of living. So I think it's very critical that we move towards a path of trying to integrate financial literacy as a part of our curriculum as early as possible, now that we've touched on the benefits. To conclude this theme, I'll say this, financial literacy is yes, a fundamental component of exercising constitutional rights and fostering economic and personal development in South Africa because of the many barriers that Ezra and I have spoken about, because of the gaps in financial education. And investing in financial education today will yield substantial benefits. It will improve societal well-being and economic opportunities, not just for us, but for our future generations who come after us as well. I think the time has come to pass down something to the generations who come after us that they can then pass on to generations who come after them. But it has to start somewhere, and it starts indeed with financial literacy. I also want to touch, while I have the screen up in front of me, on the right to access to adequate housing. That's Section 26 of the Constitution. And I know this is something that many people will be interested in, especially many of our listeners will be listening to this later on, because it affects South African home buyers. I mentioned earlier that the state has a responsibility to ensure that the right to adequate housing is fully realized and to provide adequate housing to all people in South Africa. But the question that we have to ask ourselves here is the state really doing enough to realize Section 26? Should you be worried that your right in the Bill of Rights to adequate housing is not being fully achieved? And here, I think I have to just say that Section 26 mandates that the state must progressively, and the key word here is progressively, realize a right to adequate housing by implementing reasonable legislative measures and other measures within its available resources. But I'm not sure if many of you have seen the many events that have proven to us that there are so many crises going on which question whether the state is doing enough. For example, I'm sure many of you have seen the recent Marshalltown fire in Johannesburg that claimed 77 lives, and that stemmed from overcrowding or hijacked buildings, and questions whether the state is doing enough to realize Section 26. Also, we find the ongoing homelessness situation in Cape Town, which highlights the acute shortage of affordable and decent housing in Cape Town. The FW de Klerk Foundation has also released a human rights report card in 2023, which revealed systemic issues that still to this very day continue to hinder progress in the social housing sector, like, for instance, the rising cost of construction, slow land release, diminishing state grant funding. All of these impede Section 26. I looked at Cape Town. I just want to mention something off bat on the housing crisis in Cape Town. In Cape Town, 76% of the population earns below 22,000 rands per month. 76% of the population earns below 22,000 rands per month. And only 34% of formal housing caters for that income bracket. So 76% of the population are only catered for by 34% of formal housing. Surely that's a crisis on our hands. Furthermore, there are other problems in the housing sector like extortion, like racketeering. These have significantly disrupted housing projects in the Western Cape. We also, if you're from Gauteng, you would know that there's a big problem of a construction mafia going on. This affects approximately 19,000 beneficiaries. It costs provincial governments approximately 215 million rand in security expenses. So I'd like to touch now on some legislation, some laws that are meant to give effect to Section 26, the right to adequate housing in the Constitution. The first is the National Credit Act, the NCA. You'll see on the screen in front of you that the NCA is instrumental in safeguarding home buyers by ensuring responsible lending, in other words, borrowing practices. And within the National Credit Act, there's a specific section, Section 81. Now, Section 81 of the National Credit Act, that mandates that credit providers conduct a thorough affordability assessment before granting credit. So credit providers like banks can't just give loans to anybody without doing an assessment. They've got to conduct this assessment to see whether or not you'll be able to pay that loan back. For many of you that are studying or have an interest in geopolitics or international trade, you'd know that this is exactly what led to the famed 2008 and 2009 global economic crisis that started in America. It's because banks lent money to people who were not able to pay that money back. So this section in the National Credit Act prevents such a situation from happening again. We also have Section 92 within the National Credit Act, and that section further requires a full disclosure of all the costs that may be associated with credit. So when you go to a bank and you take a loan, the bank then, the credit provider, has to, as per Section 92, provide you with information that you'll pay that loan back, but with a certain interest rate, with particular additional fees, and all of these are very important for making informed decisions and also for transparency. It's always good to have transparency when dealing with financial matters like this. Ezra already touched on the Consumer Protection Act, so I will not touch on that again. But we also have the Housing Act and the Rental Housing Act. Now, the Housing Act plays a really important, a really fundamental role in regulating housing development in South Africa. It promotes equitable access to housing. It outlines responsibilities of stakeholders in the housing sector. So if you're a homeowner, what are your responsibilities? So by supporting the development of low-income housing and addressing the urgent needs of marginalized communities, the Housing Act provides a legislative framework for financial planning and for construction of housing projects. So too with the Rental Housing Act, which mandates fair rental agreements, which, if you're renting, helps to set specific standards for rental conditions and also provides mechanism for resolving disputes between landlords and tenants, something that is very prevalent in South Africa today. So I've mentioned already the importance of savings and investments and of managing credit, but if I can just touch on that a little bit more. We find that savings are very important. Savings are not just very important. Savings are the single most important thing in forming the foundation of private home ownership. And this is because prospective homeowners, meaning that if you want to be a homeowner privately, you would need to accumulate a down payment, which typically ranges from 10 to 20% of the property's purchase price. So let's assume you're buying a house and the house costs 2 million Rand. You'd need to apply for a loan, you'd need to have a down payment of between 10 to 20% of that before you can even consider becoming a private homeowner. That's between 200 to 400,000 Rands, which makes it very difficult to break into the private home ownership sector. In addition to that down payment, there are also other costs that are involved in owning a house in South Africa. Now, these include things like bond registration fees. Apart from that, you have things called transfer duties, when the person you're buying the house from has to then transfer the house from their name into your name. There's a certain fee that's associated with that. And there's also legal fees for conveyances, for people, for attorneys who transfer the property. And this is why it's very important to the listeners to understand how important it is to have a good financial plan in mind, especially before you're entering into the home market. Investments are also very important in this regard, because by investing in financial instruments like fixed deposits, like unit trusts, like the stock market, homeowners can potentially earn a higher return on their savings, which puts more money in their pocket to potentially become a home owner. But Ezra touched on credit, and I'd also like to touch on credit. Credit is very important, and effective credit management is particularly important as well. Most South Africans rely on mortgages, on what's called loans, to finance their homes. And this is where, friends, a credit score comes into play. Now, a good credit score is very important for obtaining a good mortgage rate. The better your credit score, the better the loan rate that you'll receive from your bank or from your financial institution. And that's why it's very important to have a healthy credit score, a healthy credit profile, rather, that involves timelessly paying back your debt repayments, keeping your credit card balances low. I know that's very difficult for us as young people, but perhaps stave off the Starbucks coffees and keep your credit profile low. I promise you, when you buy a house, your wife will thank you. And also to avoid unnecessary loans. This is why a good credit score is important. And what Ezra said comes into the fore so nicely, because by not having financial literacy, by making yourself vulnerable to scams, to identity theft, this all affects your credit score. And this slide now shows you how it hurts you in the long run when you're looking to buy a house. The slide in front of you just touches on something interesting that Ezra and I picked up. It's that recent data revealed that women, you'll be happy to know, now outnumber men as property buyers in South Africa. In fact, did you know, here's a fun fact, that women in South Africa now account for 38% of all property owned, compared to only 29% for men. And this is very good, but I think we have to ask the question of why. And it's not just that women are far more intelligent than men. I think Ezra and I would both concede to that very gleefully. But it's because of financial independence. It highlights the importance of financial independence for women, particularly in a country like South Africa, where women live longer than men. Women face higher rates of divorce as well. And this leads to financial independence being a key part of financial success. And this is also good for us from a constitutional perspective, because it means that now we're giving reality to Section 9 of the Constitution, the right to equality in the Constitution, and also targeted financial education. We find that there's a growing presence of women in the property market, and this is important. I think it's something that we can all learn from, because it means that the need for tailored financial programs can put us all in the bracket where we can all become homeowners and all exercise our rights to the Constitution more effectively. Before I make it too long, the barriers to home ownership are plenty, and I've touched on many of them. To touch on some more of them, we find also that there's a high cost of property in South Africa. Many of you know that buying a house or buying any property in South Africa comes at a significant cost. There's also high interest rates in South Africa because of macroeconomic decisions, and also economic pressures, like individuals might have high levels of personal debt. This might make it a challenge for many South Africans to own their own homes. Further than that, you also find that there's delays in property transfers. So what I mean by this is that the process of transferring property and ownership can be lengthy, but also very costly. It's very expensive to transfer property in South Africa. And there's a specific office that deals with this in South Africa. We call it the Deeds Office. Now, many of you are familiar with the Deeds Office, or you've heard of that name before, but the Deeds Office is responsible for processing property transactions. But property transactions often take several months to complete. And during this time, sellers do not have access to the proceeds from the sale, which can create financial stress, especially for those who need the funds for other purpose. So it isn't as simple as selling a house today and then tomorrow you're able to take the money from the house and pay off your other loans. You've got to wait a long time, an interregnum period, where before you sell your house, the property has to be transferred before that money is able to be utilized by you. So in conclusion, I think we see from all of this that Section 26 of the Constitution guarantees the right to adequate housing by the state, but we also covered on the fact that the state is simply not doing enough to see that right properly realized, which is why so many people go into the private home ownership market. But we've also covered many challenges in that respect as well, and the numerous costs that are involved. And friends, that is why understanding savings, understanding investments, understanding credit management as a whole, having that financial literacy is so crucial for navigating that complex path to home ownership. I'll leave it at that, and Ezra can take over before we round up.
All right. There we go. So, thank you so much, Ismail, for that. Now, let's look, and this is just gonna round up. I know with time, we just a few minutes there, but we're just gonna round up, and then we will get to questions. So if you have questions, please prepare them. So looking at the constitutional imperative of economic rights, we see that today there's a vital intersection between entrepreneurship, economic rights, and equality, which are all enshrined in our constitution, right? But we also have to remember that small businesses are not merely economic ventures. They're not merely these tiny economic ventures that at times we don't notice. No, but they are fundamental expressions of our constitutional rights and are instrumental in promoting equality within our nations, within our economy. Now, when we look at section 9, sorry, of the Constitution, we look at the right of equality. And basically, this guarantees equal opportunities in economic activities. This section mandates that all individuals, irrespective of your race, your gender, your socioeconomic status, we all should have equal access to opportunities in the business world. Therefore, it seeks to, I can say, dismantle systemic barriers and discriminations that could prevent individuals from pursuing entrepreneurial endeavors. Maybe some of you here are those individuals that seek to pursue entrepreneurial endeavors in the future. Now, by ensuring that everyone has the right to participate in economic activities without discrimination, we lay the foundation for a more inclusive and equitable society, which, as Ismail rightfully highlighted, is becoming more and more important in South Africa, given the severe wealth disparity. Now, Section 22 of the Constitution highlights the freedom of trade, occupation, and profession. Now, under Section 22, we see that it upholds our right, as we mentioned, to trade, occupation, and profession. Now, this provision is essential for entrepreneurs as it allows individuals the freedom to engage in economic activities, establish businesses of their choices too. However, it's crucial to remember that this freedom is not absolute and is, how can we say, subject to regulation by the law. This balance ensures that individuals coexist with broader economic policies and public interests. Now, there are positive and negative developments to this. Now, looking at positive developments, we see that it's reinforced constitutional protections. For example, we can look at what Ismail and myself looked into. We see that the Supreme Court of Appeals 2023 ruling in Democratic Alliance versus the Minister of Home Affairs, it invalidated provisions of the South African Citizenship Act of 1995 that unduly restricted economic freedoms. This landmark decision rather underscores the commitment to safeguarding the freedom to trade and engage in economic activities. Furthermore, we also see the growth of South Africa's informal sector post-pandemic, which is very much to be taken note of. We see the informal sector, which includes local spazas, beauty salons, and car washes, has expanded significantly. So it's showing a higher trajectory growth, contributing around 17% of employment and playing a crucial role in food security and human dignity. This resurgence reflects the constitutional promise of economic inclusion and empowerment. But let's look at the negative developments to this. Now, we see that despite these positive strides, we face challenges that could impact economic rights. When we look at the Employment Equity Amendment Act, we see that it aims to enhance workplace diversity by setting numerical targets for equitable representation. Now, while intended to promote fairness, critics argue that it may adversely affect job opportunities for minority racial groups, potentially leading to job losses or higher unemployment rates, things like that. Now, such concerns highlight the need to carefully balance equity measures with broader economic implications. Now, similarly, let's look at the National Health Insurance Act, which sparked much debate. Each of us here will have our own, we reserve our own views towards the NHI, but it sparked debate about its potential effects on the health sector. Critics worry about an exodus of medical professionals and feasibility of the proposed funding mechanisms. These issues could affect economic stability of the healthcare sector, and future entrepreneurial ventures within the healthcare sector. Now, looking at the entrepreneurship and economic rights, we see that we're focusing on navigating the legal landscape for business success. Now, we're understanding that the legal landscape is critical for the success of any small businesses. Entrepreneurs must navigate various legal requirements to ensure compliance and support business growth. Now, when we're looking at choosing a business structure, we see that the choice of business structure is a fundamental decision that impacts liability, taxation, and operations. Now, we have three main avenues. We have the sole proprietorship. This simple structure involves one individual owning and operating the business. While it offers complete control, it also entails personal liability for business debts. Then we have the partnership. Now, the partnership involves shared ownership, right, among two or more individuals with varying levels of liability and responsibility based on the type of partnership that you are engaged with. But then lastly, we have the company. Now, this offers limited liability, protecting personal assets from business debt. This structure is often preferred for, let's say, attracting investment and providing operational stability. Looking at registering the business, we see that the legal registration ensures formal recognition and compliance, right? It's very important that all businesses are registered, right? Even though we know that there's many informal businesses in South Africa, which do contribute to our economy. Now, when we look at the Companies and Intellectual Property Commission, the CIPC, we see that businesses must register with the CIPC to gain legal status. This includes selecting a business name, registering the company, and obtaining a registration certificate, right, which will make you formal, right? But then we also look at SARS. Now, entrepreneurs must also register with SARS for income tax reference numbers, crucial for managing tax responsibilities, including VAT and pay, if applicable. Lastly, we need to understand employment laws. Now, compliance with employment law is essential if you are trying to venture into entrepreneurship. By this, we look at the Basic Conditions for Employment Act, which sets the minimum employment standards, including working hours, overtime, and leave entitlements. Secondly, we look at the Labor Relations Act, which governs labor relations, addressing disputes, resolution, collective bargaining, and unfair dismissal. Then we look at the Employment Equity Act, which promotes diversity and prevents workplace discrimination, requiring businesses to develop employment equity plans. And then we look at the Skills Development Act, which establishes the framework for workforce training, requiring contributions to skills development, a levy, the SDLY. And within this, we'll find, for example, institutions such as this CCMA, and we find policies such as like affirmative action, the triple BEE, things like this. Now, looking at the legal framework supporting small businesses, we see that several key pieces of legislation there are several key pieces of legislation that support small businesses in South Africa. Number one, we look at the National Small Business Act of 1996. And this act provides a framework for supporting small businesses, which includes the National Small Business Advisory Board, and the support programs aimed at fostering business growth. The National Small Businesses Support Program offers financial assistance, training, and infrastructure development to enhance businesses' sustainability. We see the Consumer Protection Act. We've discussed the Consumer Protection Act, so I won't go over that. But then we have the intellectual property laws. These laws protect trademarks, patents, and copyrights. And essentially it provides legal safeguards for innovative ideas and brand identities, right? Especially if you're venturing into entrepreneurship, these things become ever more important. Then we have the Financial Reporting and Compliance Act of 2000, Compliance Companies Act of 2008. And this act mandates financial reporting requirements, including annual financial statements and auditing, ensuring transparency and accountability within your entrepreneurial practices, right? Which is very important. The transparency element is very important, especially in a nation with high corruption and everything. You know, it's even corruption that sometimes even prevents foreign investment from coming into South Africa. Now, these are established to mitigate corruption, you know, to try and work around that, you know, which would outwardly have a positive impact for our economy. Now, looking at tax compliance, lastly, and this is a very important one. There's many you'll see throughout the news. There's always, especially, you know, very key entrepreneurial individuals, businesses. Tax compliance is a very big question, and this includes like regular and accurate reporting to SARS, which is crucial for compliance. That's how one is given compliance. And entrepreneurs must keep detailed records, file tax returns timeously, and adhere to VAT and pay regulations, right? Now, looking at leveraging support for entrepreneurial success, we see that to thrive, entrepreneurs can leverage various support structures. And if you want to be an entrepreneur, these are certain structures that will help you thrive. Now, we see the Industrial Development Corporation, the IDC, which offers funding and advisory services, particularly for businesses in manufacturing and industrial sectors, supporting growth and development. Second, we have SEDA, the Small Enterprise Development Agency. SEDA provides business development services, mentorship, and access to funding opportunities, helping entrepreneurs overcome challenges and achieve sustainable growth. Lastly, we see the importance of support structures. Support structures are vital for business sustainability and growth. They provide various things: resources, guidance, financial backing, which if you're a small business owner, financial backing is important. They do provide it for entrepreneurs, also to help them navigate challenges within the present economy and expand their ventures. So the expanding ventures part is even more exciting if you're an entrepreneur looking to move forward. Lastly, what I'll focus on before handing it over back to Ismail is advancing economic rights and equality through entrepreneurship, right? Now, starting a small business is a significant way to exercise economic rights and contribute to a more equitable society. Now, realizing your constitutional rights, and again, realizing we live in a country where many people don't realize their rights within the constitutions, but once they realize their right in the constitution, then they're able to stand up, you know, and fight for the life that the constitution envisions for them. And this is the same with small businesses. Small business ownership is a practical expression of economic rights under Section 22 and promotes equality as envisioned in Section 9. It empowers individuals to engage in economic activities and contribute to societal advancement as a whole. But it also empowers entrepreneurs. Now, financial literacy is crucial for successful entrepreneurship. And it's important now as youth that we're learning this. We recognizing the importance of this financial literacy in future endeavors, whether it be in the public sector, corporate, or whether you're going to venture into your own business, or even working for the public sector. Now, it equips individuals with the knowledge to make informed decisions. You're able to manage resources effectively. You're able to navigate financial challenges. Now, by promoting financial literacy, what happens is that we foster this environment where people from diverse backgrounds can start and sustain businesses, advancing the economic inclusion within the country and reducing specific disparities. And just to end that part off, as we like working towards Smart Money Week, let's recognize the critical role financial literacy, plays in empowering entrepreneurs and promoting equality. Now, the F.W. de Klerk Foundation is committed to supporting initiatives that advance economic rights and foster a more inclusive and equitable society. So with that, I will hand it over to Ismail.
Thank you very much, Ezra, and I hope that everyone has been learning a lot. Before we end off, I'd just like to have 2 or 3 more slides to share with you, and a very important topic which really has been taking center stage is that of property rights. Property rights are found in Section 25 of the Constitution, and Section 25 of the Constitution is more than just a legal safeguard to owning property in South Africa. I would say that Section 25, property rights, is the very core, the backbone of financial security and stability in South Africa. And why? Because if you read Section 25 of the Constitution, it ensures protection from the arbitrary deprivation of property. That means that the state cannot just take your property away from you for any random reason. Also, it mandates that any deprivation of property must adhere to lawful and just processes. So you see it's a protection, and that this protection is very crucial for fostering that environment of economic stability that Ezra spoke of. What it also does is it gives confidence to individuals, which gives them then the ability to invest and save and plan for the future, knowing that their property is secure from any unjust confiscation. The significance of property rights extends beyond mere ownership. It's more than just owning property. For many South Africans, property, and I use this with capital letters, property represents a substantial portion of their wealth. It is not just a place of residence, but it's also a vital asset in their financial portfolio. So therefore, you see that protecting property rights is absolutely essential for effective long-term financial planning. Property ownership then also allows individuals to leverage their assets for securing loans. You can use your property to leverage starting a business or even for planning for your retirement. We as young people have to look at retirement from now. By safeguarding property rights, we enable individuals to make informed financial decisions with confidence that their assets are indeed secure. And this also ties into Section 26, the right to housing, which I've spoken of, because it underscores that access to adequate housing is a fundamental component of financial sustainability and stability. But when we consider leveraging property assets, we see that property ownership plays that crucial role that I spoke of. And property can be, as I mentioned, utilized in securing loans and starting new businesses. And I mentioned this specifically, and I've included this in the slide because all of this, using property to leverage starting a business, falls in line with another section of the Constitution, one that we've been speaking about, Section 22 of the Constitution, the right to economic participation, which guarantees the right to freedom to choose one's trade or occupation or profession. And therefore, we have to have effective financial planning to consider how property rights support our economic activities moving forward. Something else that had to be touched on in preparing this webinar is land reform, or the question around land reform. When we look at land reform, especially in South Africa, we confront this very complicated and complex landscape that significantly influences our financial standing as individuals. Land restitution is a critical initiative that's aimed at addressing historical injustices from the apartheid era by returning land to those who are dispossessed. And so this process is seen by some as being essential for promoting social justice and addressing those historical wrongs. It also affects financial stability. And here we have to touch on the expropriation bill. I want you to bear in mind what I said on the previous slide about Section 25 property and how no one can be arbitrarily or randomly deprived of their property. And I want you just to hold on to that question when I speak now about the expropriation bill. So the expropriation bill of 2020 has sparked considerable debate. This bill proposes the possibility of what's called expropriation without compensation, or what we call EWC. Now, to have expropriation without Constitution, as you see, it conflicts with Section 25 of the Constitution, that right not to have your property arbitrarily deprived, right? So obviously, to give effect to expropriation without compensation, you'd have to amend the Constitution in its current form. And so, therefore, there was a thing called the Constitution 18th Amendment Bill, which sought to amend Section 25 to permit, to allow for expropriation without compensation. But this was rejected in 2021. And so as we record today, we see that the expropriation bill still remains under discussion. But this bill introduces significant uncertainties about property rights and compensation mechanisms. And so the potential for EWC must be something that you ask yourself about when considering the security and the value of your property investments, because this will create a lot of challenges for property owners and for financial planners alike. I have to also just mention here that despite all of these uncertainties that I've mentioned, there has still been some progress in land restitution. I am proud to say that approximately 4 million hectares of land have been restored to their rightful owners, and compensation has been provided for an additional 2.68 million hectares of land. This is progress, and this progress reflects a commitment to addressing our historical inequalities, but also highlights the complexities of balancing justice with economic stability. Here, President Cyril Ramaphosa acknowledged that 25% of farmland is now owned by Black South Africans. And this demonstrates notable advancement, but it also indicates the need for ongoing reform and for effective policy implementation that will not dilute anyone's rights as per the Bill of Rights. We also see that for financial planners and for property owners, to understand how all of this links in with your financial security and your rights in the Bill of Rights is absolutely crucial, and that's why financial literacy is so important in this regard. Lastly, we see the housing challenges that I've mentioned. I want you to think back again of what I said about the housing crisis in Cape Town, about the Marshalltown fires in Johannesburg, and about how much this all costs the state and how that affects you as an individual. But before ending off, I have to say that the interplay between property rights and economic opportunities outlined in Section 22 reinforces this importance of financial planning. When you use your property as collateral for financial activities, it's very important then that you know that your property is secure. So if you were to leverage your property to, for example, get a bank loan to start a business, surely as an individual, you'd want to know that your property is indeed secure and that your rights, as per the Bill of Rights, are being fully realized. And this is why financial literacy comes to the fore. Before I end off, I'd also just like to speak on the national health insurance that I know Ezra touched on. For those of you that don't know or would like more clarity, the NHI, the National Health Insurance, is an initiative, is now an act of law that's been signed into law that's designed to replace private medical aid schemes and essentially to centralize healthcare financing under the state. And so the core objective of NHI is what? Is essentially to ensure that every South African has equal access to healthcare services, irrespective of their financial status. And I think a lot of people have a lot of dissenting opinions about NHI. While the goal of NHI is indeed commendable, there exists just so many practical challenges in seeing NHI implemented. For example, let's just address the government's capacity to manage NHI. I'm sure that many of you know that currently our public healthcare system is struggling with severe staff shortages and resource constraints. We have over 800 qualified doctors who are unemployed. The system faces challenges in recruitment and retention due to budgetary constraints and inefficiencies. In other words, the state simply doesn't have the money. According to the Medical Protection Services, many doctors cite staff and equipment shortages as a critical threat to patient safety as well. We know that NHI will cost around 460 billion rands annually, which also raises questions of whether NHI will indeed be sustainable. And from all of this, we see that NHI also is one of the things that we need to know about from a financial literacy perspective to know where we stand. Something else that I'd like to touch on too is the coverage limits, managing healthcare costs and navigating the challenges of NHI. Individuals here, I need to say, must be aware of what the NHI covers, and then you can plan for any additional health expenses that are not included in the NHI's package. And this, again, is why financial literacy is so important, because financial literacy aids in assessing personal healthcare needs and then budgeting for any out-of-pocket costs that might not be covered by this healthcare scheme. Managing health costs, as I mentioned. So you have to be familiar with the benefits that NHI might provide to you, and the potential gaps in covering those costs will help to allow you to set aside some money for a rainy day in an emergency fund or for seeking supplementary health coverage if necessary. And so this is a change that all of us must adapt to. And so as we see the NHI now gradually being implemented, again, financial literacy enables us to stay informed about these changes and to adapt our financial plans accordingly. My last slide touches on the two-part retirement system. The two-part retirement system is going to be implemented from the 1st of September 2024, and this reform introduces a new approach to managing retirement savings, which distinguishes retirement savings from immediate accessibility and long-term preservation. How it works is that you have a vested pot, a savings pot, and a retirement pot. The vested pot retains previous saving rules. That's not going to be challenged by any new regulations. It preserves existing retirement savings under the terms and conditions that were accrued. You then have the savings pot, and the savings pot is designed for short-term financial needs. So this saving pot allows you to withdraw money annually for any necessities that you might have. And this feature provides some liquidity, some money in your hand for any immediate expenses or unexpected needs that you might have, with a percentage of contributions allocated to the savings pot from the 1st of September 2024. You then have the retirement pot as well, which is dedicated to long-term retirement savings. From all of this, friends, I think what we've seen is that as South Africa transitions this landscape that we're in, we find ourselves in a very precarious position. On the one hand, we have new legislation, we have the rights in the Bill of Rights that must be respected, we have new developments like expropriation without compensation that's currently under debate, or like the NHI and the two-part retirement scheme. And for us as normal average South Africans, I believe that financial literacy not only allows us to adapt to the landscape that we're in, to better understand the landscape that we're in, but it also helps to better prepare us financially on how we can not just survive in this changing landscape, but indeed thrive and move forward knowing that our rights are protected, but also that our money is protected and that our futures are secure. I will now like to open the floor for any questions, if there may be. Asks or says or comments, I think people have given up on financial literacy because most do not earn or make enough money to manage. The thought might be why we have financial literacy when the system is against us. That's very true. I wouldn't absolutely say that the system particularly is against us. I do say that what we do need is financial literacy from an early age, as Ezra and I spoke about in the slides. And as to not making enough money, the question really should relate. I think the bottom line that we should be speaking about is whether your rights in the Bill of Rights are respected. Because regardless of whether you have a certain financial status or not, everybody is supposed to be, it has, as a South African citizen, the right to dignity under Section 10 of the Constitution, the right to inherent dignity. That's something that you're born with. Something else also is the right to economic participation. Regardless of what your financial status is, there shouldn't be any barrier to seeing that right realized and to seeing you being able to compete in the economy. And so because you want to compete in the economy, because you want to have that right to your trade or occupation or profession fully realized, it's very important then that financial literacy equips you with the tools you need to survive and thrive in that landscape. Somebody else asks the question or makes the comment, the fact that financial literacy is on a decline in South Africa and the deterioration affects even individuals with educational qualifications is a pivotal problem. Indeed, this is a pivotal problem. And I think it's a pivotal problem because we as South Africa need more than any other country in the world to understand financial literacy, to be equipped with financial education, because we are one of, if not the single most unequal society in the world. And if you go to some of the Western countries in the world, you find that even in their schooling system, they're taught, they're equipped with the knowledge of how to manage their taxes, on how to save, on how to draw up a business plan, on how to budget for the future. And here in South Africa, we find that the people who need it most, who are climbing up the economic ladder, who might even get good jobs or have good career paths, don't understand how to manage money. And so the management of money can only be fully sought and realized if that education, that knowledge is instilled in you in the curriculum that you're offered in your schooling career. I see that that ends the questions. I know that we were a bit over time. Ezra and I apologize. I think it's testament to the passion and commitment that we have to not just this topic, but to empowering young South Africans from a constitutional perspective, yes, but really seeing the betterment of all South Africans in whatever way we can contribute. The goal of the F.W. de Klerk Foundation is to play a constructive role in society. And being constructive means also being proactive, reactive in seeing that we are on the decline, but proactive in informing young people especially of what we can do to get out of where we are and get to where we want to be. That's why Ezra and I are so passionate about constitutional advancement. Thank you very much, everybody.